Hey everyone, hopefully you're having a good day. My name's Andy, my channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance, and if you want to join our community, finding-value.com. I dive deeper into all these topics, sectors, looking for investment opportunities, sharing how I come about finding these opportunities, why I think they're good, why I think the sector is good, my approach, which is the three-pillar approach. The three-pillar approach is ratios, technical analysis, and market conditions. So they're all kind of intertwined and they work with each other. No, I do not use other people's opinions. I don't use the news. I don't use any of that stuff. I have purposefully stripped it all out. And that's why I make my opinions on Twitter, whether I agree or disagree with a lot of these opinions. I transfer my knowledge two ways: through midweek updates, which I release Tuesday night, Wednesday morning. And then also I do Q&A sessions where I interact directly with everyone in the community if they see fit to do so. They are recorded, they're uploaded to the website. So if you have questions and you want to ask somebody, I'm here to help. And you can do that during the weekend, or you can send it to me before those meetings and I can answer them during that meeting. Special is a coupon code if you like to get some savings. It's 50% off the first month only on the monthly membership. It comes out to $25 for the first month. And you can always swap to the yearly membership, use that special coupon code, and you save $100. It ends up being $500 for the entire year. All right. So against all odds, that's bullish. So we've got natural gas is ripping higher in the weakest seasonal period of the year. Natural gas seasonality, January, February, March, April, May. And you can see it's stronger during these periods, and then it's weaker during December and January. Well, that's not the case this year. If you look at natural gas, it is ripping to the upside. We recently broke out of the channel here to the upside. Natural gas down here back in 2024 was incredibly cheap. How do I know that? Well, you can do ratios. So natural gas divided by gold, and you can see how cheap we are in relationship to gold. In fact, we are very, very, very cheap all through here. Historically, up here, very expensive. Now, if we were to go back to a historical expensive ratio, I'm curious to see what this is because I haven't done it in a while. See this little line down here? That's where we're at today. If we go back to the top up here, oh, sorry, I didn't grab the right one there. I meant to grab the price range. So we go here all the way up. That's a 2,394% increase against gold. And that doesn't mean that gold, I mean, gold could continue higher, but that's where it would peak if it were to do that again. I don't know if it's going to do a 24x from this. It seems kind of unbelievable, but I don't know. Maybe that's what it was back in 2005 and 2000. It looks like about 2000 back here. Yeah, the year December 2000. If it were to do that, I don't know if it will. But yeah, we were real cheap down here in these areas all through here. And that's one sign of things to look for to accumulate. We're all safe. Come down and says, if you earn money, it's taxed. If you spend it, it's taxed again. If you can still afford a house and some land, it continues to be taxed even after you pay it off. If you save any money left over in a savings account, any interest earned is taxed. If you invest your money, the capital gains are taxed. If you die, the wealth and property are taxed to descendants through the estate tax. And even with all of that cash, the Fed still can't balance the budget. And it's not the Feds, it's the government. The Federal Reserve isn't the one if he's referring to feds as being the Federal Reserve. This should make everyone mad. Our ancestors fought the American Revolution over far less than this. Yeah, I agree. I don't know what the total tax is. We're probably taxed something like 80 or 90% is my guess. And other people will say, well, what about this country? They're taxed more. I'm not so sure. You go buy gasoline, go look at all the taxes in your gasoline, go look at all the taxes that are added into your cell phone bill. I mean, there's taxes all over the place. So they tax you on the front end, they tax you on the back end, and then they tax you special taxes all in between, like if you're buying gas, and then they tax all the companies that you purchase their products from. And companies don't pay taxes, their customers do. So when people say, "Oh yeah, tax those greedy corporations," you're just taxing yourself. You're actually being a moron. Yeah. I mean, you're like, I want to pay higher prices so I can pay higher corporate taxes. And then when the corporations think that they can't sustain a business in a high tax environment, they leave. Stupid, stupid, stupid. You don't want any taxes. You don't want any tariffs, taxes. You want to get rid of everything. Then you want to get rid of all these different taxes. You want to get rid of all the social nets. And then all of a sudden, milk's going to be like 5 cents a gallon. Because what's even worse is inflation is another tax on top of it. And then when you start adding this all up, we're just slaves to a system. And that system is the creation of paper currency. The currency is the problem. That is what the root of all problems are. And if you eliminate the root of the problem, we will all be better off. Now, all that's going to do is just going to lower the price of everything and cut out all the middlemen, all the banks, all the lending, all this stuff. Home prices would drop dramatically because people aren't getting loans, and then everything drops dramatically. You'd have to do everything from savings instead of borrowing and lending. Sam says the risk on energy stocks keep outperforming. We've got oil services versus the S&P 500 breaking out of this little bottom here. Yeah, we were getting in all through here. The charts looked fantastic in energy service in April and May. That's when most of them bottomed and started to head higher. I'm not stating that I hit the exact bottom, but I got close enough around there. I tried my best, got some real good entry points, bought some ridiculously underpriced companies, and now they're up massive. Some of them are up massively. I mean, massively. Some of them have just turned the corner and took off. Hundreds of percents off that bottom. Hundreds. And the key theme here is you got to buy when everyone is fearful. And then you got to sit there and not do anything, wait for it to go, and buy when things are cheap. And just do repeat, rinse and repeat. Watch these things cycle against each other. Now, I'm not a huge fan of wait for the breakout because I mean, I was sloppily buying some of this and I still beat the breakout bros, which means I got a lower cost basis than the breakout bros on the tech. The tech bros, the technical analysis bros, not technology, but the technical analysis bros that only buy breakouts after like 17, line breakouts, like the falling line, the less falling line, and then the horizontal line. So I just sit in there, buy value, get when things are out of favor, and then be patient enough for the cycle to turn back into favor. Breaking, Rio Tinto is aggressively restructuring to focus exclusively on iron ore, copper, and lithium, targeting immediate cost cuts and 5 to 10 billion in non-core asset sales. Yeah, I think that's pretty smart. I think there's a couple of other things that I think are as good or better than those two, but it's all energy related. U.S. plans more stakes in mineral companies. Trump official says you're not bullish enough. A lot of people look at this and they say, "Oh, the government's going to buy this." Guys, they're not running the show. They're reacting to the cycle. They are reacting to the cycle, and they're probably trying to figure out ways to game it. U.S. plans more stakes in minerals companies, Trump official says. Yeah, they're going to start dumping money into it because it's going to be highly successful going forward. We're coming into an era of scarcity, resource scarcity. And I think everyone is starting to figure that out. And then the more that people figure that out, the more money that rotates. And there's your commodity bull market, money rotating from financial assets into hard assets. And then it just repeats. It's over and over and over. More people will do it. More people see it. More people gain confidence. You have to buy when people are not confident. You buy when there's uncertainty. You, as an investor, your job is to become comfortable in uncertainty. How do you gain that comfort? How do you gain that confidence, that conviction that is needed to buy when everyone else is telling you you're stupid? Why would you buy that? It hasn't gone up for 14 years, as people tell me in platinum. Okay, yeah, you think I'm not going to buy it because people are telling me it's a stupid move and it hasn't gone up for 14 years? You know what I tell them? I'm buying it because it hasn't gone up for 14 years. I'm buying it because the ratios are cheap. I'm buying it because it's below the cost curve of the higher cost producers in platinum. And sometimes it got below the lowest cost producer in 2020. You know how much I bought at that point? It's all about understanding what I just said there. That will give you the confidence and the conviction to load up. And then when you load up, you just sit, you wait. And then everyone's going to tell you you're stupid. And then when they don't make the money because they're just chasing price performance, and you make the money because you bought it when it was cheap and just sat there and did nothing, they'll eat their words. They'll eat their words. Rock bottom entries, all-time high breakouts and cycle bottom reversals are firing across the entire commodity complex. The next few years are your shot to make it rain and escape financial slavery. I don't think we'll see a better setup in our lifetimes. Do the work, buy and hold quality stocks. And I agree. I don't think there's a better setup in our lifetimes. This will be the best setup of any setup. Now, there's been a pretty good setup in technology stocks from 2009 to 2023, 4, 5, depending on which companies they are. That was a pretty good setup. This setup here is another one that's setting up that you can buy close to the lows. And then you have to ride it for about 10 years, is my guess. 10, 15 years, somewhere in that range. We'll have to see how this plays out and how fast it develops and moves. But this is it. We are at the beginning of it. And we're in it. We're not like beginning stages. We're in the move. The beginning stages was 2020 when everyone was just dumping loads in their pants, too scared to buy anything because we had this vaccinations and the C-19 event and all that stuff. What a great opportunity to buy as much as you could. That was a tough one. I get it. Time for a squeeze in the E&Ps, the exploration production companies, and oil and gas. Short interest is most likely going to decline here, and we're going to see a move higher in oil and gas exploration production. Yeah, we're there. And I think we've got the best companies for what is coming. We've got that covered. So I'm excited. Uh, I always like the buildup, the excitedness and the purchasing and the buying when it's really low. That's kind of my favorite part of the cycle. It's like max anticipation or max, how can I say it? It's the period where you've got the most potential. I like that. As potential is realized and you go through the bull market, even though you're making money it's good, it kind of feels like your opportunities just get used up. So, I always like that max opportunity. Like when you're in your 20s, you've got all that stuff ahead of you. Like it's all in front of you. You're excited. You've got max opportunities. That's kind of how I feel at the beginning of these big bull markets. Like you've got max opportunity. You're looking at all the different companies. You're trying to figure out which ones to allocate to. What are the best? All of that stuff. And then I look at it and I'm just like, oh, this is so much. It's a lot of fun. Then you buy it, you kind of sit, and then the rest is just sitting and doing nothing. You just sit there and watch people uh, worry about the little zigs and the little zags. Twitter, they got all the technical analysis people. They're all charting. We've got an RSI overvaluation. It's too stretched above the 200-day moving average. The MACD is well above zero, and we could easily turn lower. The relative strength indicator is stretched beyond 80, and we could easily turn down. But none of these guys make any money. None of them make any money at the end of the day. Why? The guy who just buys and sits when it's really cheap and waits for it to be, we'll just say, really expensive, or until the cycle's done, commodities are expensive against financial assets. And, there's some times in history where it would have been a very tough trade or invest. 73 to 74, we had that big pullback. That kind of shook some people out. And then we ran again into 1980. That would have been a tough one. But I just see everybody they're running around trying to time the short term, and I'm just like, what are you doing? We're in a gigantic bull market, like we're in the thick, like we're beginning the thick of it. Uh, it's going to last, I think, a good long time. People are so worried; they're running around chasing their tails because one inconsequential metric is over extended. It's, I mean, really, but nothing's changed. Everything's cheap. You go look out in the future, and the supply demand gaps are just massive. That's all I look at are those supply demand gaps, and I just laugh. I'm like, what are these people doing? Like, we don't have the projects in the pipeline. Like, it doesn't exist. And it says you can't spell bullish without uranium, lithium, copper, antimony, cobalt, and nickel. And those are some of the metals that we're going to try to use to substitute an energy shortfall. Those are all the ones. Uranium, lithium, copper, antimony, cobalt, nickel. And some of them are used in batteries and electric vehicles, transmitting energy across lines. Aluminum should be in there too. But yeah, I'm playing this whole thing. I'm playing it, all these. I'm in each one of these sectors. Cobalt and antimony, maybe not as much, but the other ones, yes. I think aluminum too. I like, in some of these, I don't think there's a bunch of good options. I think there's like a single or two company. That's it. So, yeah. It's the fourth time the charm, energy versus the S&P 500 trying to break out. It'll break. It follows gold. It follows copper. It's coming. And that's the one that I really like. I like energy. Energy is like, when I was a little kid, I always wondered, how do we continue to fill up all these cars day after day after day? So then that's like where my interest was. It's like, how do we fill this up all the time? Uh, we can't be having an exponential, limitless amount of gasoline. So I always thought that was kind of interesting. So I learned about it, learned about oil, learned about oil declines, the fields all in the world, the big producers, the smaller producers, and how now we are extracting oil out of sand, out of sand. But you know what? We don't have an oil problem. Oh no, but we're extracting it out of sand and 3 miles underneath the ocean, into the ocean floor. And I'm sure we don't have an oil problem. I mean, we just go out there for the heck of it, right? We build these big machines and drill ships and drill a few miles underneath the ocean floor. That's perfectly normal because we have so much oil on land. Here's the harsh truth. It says large portion of people who live paycheck to paycheck are simply bad with money. Most people can save $10 per day by being a little more careful with their money. Do you agree? Um, I don't know. I don't know what people's problems are. I'm sure that a lot of people can save a lot more money. I see a lot of waste going on and a lot of borrowing. You don't need to borrow money. I wouldn't borrow money to buy a car. That's just me. I would find maybe unless I will restate that I would borrow money if it was a 0% interest rate. I would borrow money. If it's like a 5 or 6 or 7 or 8 or 9% interest rate, I would not. But if someone said, you know what, we'll give you a 0% loan for this, and I already had the cash, I'd be like, you know what, I'd probably do it. And then I would invest the money and then pay it off over time with dividends on investments. That's how I would do it if it was 0%. But yes, I do think a lot of people probably could save money. But there's entire industries and companies that make ridiculous sums of money that I spend zero money on. Like coffee. I don't drink coffee. Starbucks, they rake in the money. Do people really need to drink that coffee? No. Does anybody need to drink an energy drink every single day? No, they don't. It's probably not healthy for you. That's like a few bucks a day right there for both of those. And I just drink water. Yeah. Emerging markets have everything lined up to outperform. I firmly believe in the cyclicality of markets, and this time won't be any different. It says historically, emerging markets had to run current account surpluses just to secure enough United States dollars to pay for energy and commodities. Now they increasingly have the privilege of buying in their own currencies. That frees up capital for domestic investment since fewer USD are needed for imports. Louis Vincent Goff calls this the reverse carry trade. I agree. Um, this is like down here is similar to like the 60s here. Like that general area, I think is good spot to be accumulating. Then we'll cycle back up for a very long time. Now, look at this cycle. This went from 65, 66, 67, somewhere in there, all the way up to 1993 or 4. That's 30 years. 30-year increase. So when people say, well, we need to have an exit plan, I'm like, this could last a long time, guys. We're bottoming cycling against the dollar is topping and these other currencies are bottoming and we're going to cycle back up. And it could take some time. So when someone asks, what's the exit plan? I don't know. I mean, at this point, it'd be like asking what's the exit plan for gold in 1967 or 8 when it's just about to be freely traded. What's the exit plan on silver when it's just starting to break out of a 45-year cup and handle? We could see a decade plus long bull run. Don't know yet. Um, Go tell me where this excess silver is going to come from. Go tell me where extra copper is going to come out of the ground. Go tell me where the currency, United States dollar specifically, how it's going to strengthen, because these are all priced in dollars. I see everything just starting to turn. I know a lot of people say, have an exit plan before you enter a trade, is what they call it. These are investments, guys. I'm looking for things that are going to work for the rest of my life, potentially. Now, if something changes, if copper gets substituted by graphene or something like that, then maybe the dynamics change. But right now, I don't see anything changing. I look out in the future and see those deficits. I'm like, these things are huge. So I don't have an exit plan. I don't, at least not yet. I don't know I don't know how these things are going to resolve. I don't know if people in the 1960s had the same mindset. I don't know. It's tough. Another thing is I may exit some of my stuff if my goals are hit. If I have so much money, I might say, you know what? I'll take a little bit off the top, shave it off the top, and go throw it in some more conservative investments, perhaps, maybe physical metals or something. But I don't know. We'll see. I mean, I have enough physical metals where I think that will be uh, alone will be enough for me to retire just off physical metals. So at some point, you stop counting, you stop worrying so much. You just kind of ride through. When things are cheap, you buy it. When things get expensive, then you start thinking about potentially trimming. Yeah, I did a interview. If you guys are interested, definitely check out Gary Baum in the interview I did there. But that's what I've got for today, guys. That's where we're going to end it. Give me a thumb up for the content, subscribe to the channel, subscribe to the website. We've got a Q&A session coming up Saturday, which is tomorrow. Or no, this would be released Saturday. So Saturday, 7 a.m. Mountain Time. It is Q&A, so you can bring whatever questions. It's probably going on if you're watching this in the morning, which most people watch it when this first gets released. It's happening right now then. So, but that's all I've got for today, guys. So we'll catch you next time. Yeah.